Welcome back to the show. Has the great reset begun? You tell me. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and DigPerspectives.com for exclusive content. Right now, $4.24 trillion market cap for crypto. The market is up 0.9%, and we're at 4.24. Listen, this money's creeping back in while we got this U.S. government shutdown, right? Like, don't get it twisted. This stuff is moving forward. Bitcoin 120,600 plus. How about that for a signal? We're over 120K. That means a lot to technical analysts out here. 4,400, almost 4,500 for Ethereum. XRP number 3 spots 303. We're up 1.7 on the 24. We're up 11% on the 7-day. Looking at this, we're at 302 on Fiat Link, but we're ranging between 295 and 309. We'll keep an eye on it. Caleb and Brown, crypto brokerage, ladies and gentlemen. I'm telling you, if you're worried about your assets, you're worried about being hacked, worry no more. Maybe you're worried about, how do I do market orders? I don't know how to do that. Well, you don't have to know how. All you got to do is get your account open for free by using the link up below the video, or go to xrpwealth589.com and start getting some of the best security for your assets you could ever find, and then some of the best service that you could ever find. Personal touch, white glove service. This is remarkable. You talk about convenience, ease of use. They got it, ladies and gentlemen, and the security to boot. Click the link under the video to get started. Robinhood CEO Vlad Tenev says tokenization will eat the entire financial system. He's all in on real world assets. And guess what? So's Bradley. Bradley's all in on it too, because I can tell you right now, this is why I'm here. I am here for the greatest financial paradigm shift in the history of mankind, and it can't be overstated. And that is this. It is the tokenization of the traditional world. And that is the moment that is about to begin as soon as we get that market infrastructure bill passed and signed into law. Well, what does it look like when it does that? Well, listen to Samson Mao as he talks about where Bitcoin could go and why you keep hearing this $1 million call for a Bitcoin price. Take a listen.
If you look at the failure of fiat currencies, they don't gradually fail. They fail spectacularly. And this is the premise behind the 1 million Bitcoin call, that it's not going to be a gradual, slow increase to $1 million a coin, but rather a very short and violent upheaval that sends us there in a matter of months.
Whoa, months or weeks, he says. And DAI rightfully says, bring it on. I welcome a short and violent XRP price rise. You could you can better believe it. Yeah, I'm not going to chase that out of bed for eating crackers. I can tell you, bring it on. Basically he's talking about here, as you can see, some kind of systemic event in the markets. I don't want to put words in his mouth. That would obviously send Bitcoin parabolic in his mind, right? Due to some kind of economic issue. Well, we've already got the government under a shutdown right now. So what does that mean? What does it look like? Where are we going? We don't know. It could be days, it could be weeks, it could be over today. Who knows, right? But the point is I want to remind everybody the U.S. Treasury on September 30th started implementing their new payment system on the back end for banks and for the Treasury. So that was the 120-day executive order. It began the implementation on September 30th, and on October 1st, the government shut down. So what does the government look like when we turn back on? Does the government look like it's got new DLT payment rails? It's going to be interesting. And let's hear from former CFTC chairman Christian Carlo, who we've had at XRP Las Vegas the last 2 years. And I hope that we can get him to come to XRP LV26. Shout out to you, Chris, and everybody there at CoinDesk. Let's take a listen. I invite CoinDesk to come too.
If we get crypto right, it's a whole new birth for American finance. We're in a deep hole when it comes to debt. The only way out of our debt burden is through economic growth. If we can recapture some of the rents that are charged, some of the inefficiencies in our financial system, and bring them back to capital formation and allowing economic capital to be formed, businesses to be built, new enterprises to lead. That's our way out of our mountain of debt. We've got to get to sustainable 3.5–4% economic growth over a decade or more and grow our way out of our reckless spending. And the way
there you have it.
way to do that is to free up our capital markets. And so this is much more than just number go up.
It really is. And isn't that been the focus of what our conversations together have been here on this channel? Is exactly right, right? So there is a change a coming, ladies and gentlemen. And as he said, crypto, if we get it right, is a whole new birth of American finance. And that is going to be what is required to get us the kind of growth we're looking for. Remember, if we just come in right here, what's the real story? We'll let Brad Garlinghouse tell you.
Liquidity needs between banks. So today there's $27 trillion parked at different banks around the world so they can make payments between each other. Our view is you can use a digital asset like XRP to do that in real time. Because XRP has been so efficient, it settles a transaction about 3 seconds compared to Bitcoin. So it just passes through that.
Exactly. And basically what he's saying there in the way he's giving that answer is that they won't need to park that $27 trillion around the world if they have XRP. You can release the majority of that money and use that capital to really invest in the new financial future that I believe Christian Carlo was referencing, giving us the growth opportunity to outpace the debt, which is necessary over the next decade here. Now, remember, this is not just the United States. The digital euro goes live this year. It's all by design. SEPA rulebook, October 25. Instant payments, October 9, 25. TIPS multi-currency, October 9, 25. Let's listen to Christine Lagarde confirm that they are going to start a 2-year pilot with the digital euro, October 2025, this month.
Good question. We want to make sure that when it is launched, it's a success. So we have to really make sure that there is no hiccup, no problem in the handling of this digital currency, number one. Number two, we need the support of the European Parliament, which has to vote a piece of legislation to actually establish the digital euro. We should be technically ready ourselves in October this year. Wow. Yeah, and we would be ready to launch for a 2 years pilot to make sure that everything works fine. And then we can launch across the euro area.
Sehr spannend.
There you have it. She's just laid out the plan. That's exactly what they're going to do. And it's a 2-year pilot phase before they just roll it out full on. So this is super exciting. It's supposed to start this month. Let's see if it happens. Then let's look around the world. You have this reverse carry trade in Japan that we've talked about for a long time off and on, right? Well, here is a great explainer video of exactly how that works for those that don't understand. Remember, as you're watching this, you will learn that through this explanation, it's a great explainer video, you will learn through this that basically every central bank is connected hip to hip, and especially the Federal Reserve in Japan because of the situation they're in, which you're about to have explained to you. Take a listen.
A trader first borrows a large sum of Japanese yen at Japan's ultra-low interest rate. Thanks to BOJ policy, yen loans might cost almost nothing in interest. For example, an annual rate around 0.5%. Convert to higher yield currency. The trader immediately converts those yen into a different currency from a country where interest rates are higher. In the 2000s and 2010, favorites included the US dollar, Australian dollar, New Zealand dollar, Turkish lira, Indonesian rupiah, Mexican peso, basically any currency with a juicy yield. Invest for higher return. The funds are then invested in assets denominated in that higher yielding currency. This could be government or corporate bonds, stocks, real estate, or even just deposited in a bank to earn interest. The key is that the target investment might yield, say, 5 to 10% annually, while the cost of the yen loan remains near 0%. For instance, at one point an investor could borrow yen at approximately 0.5% and buy a safe US Treasury bond yielding approximately 5.5%, pocketing an easy 5% profit margin minus hedging costs. Multiply that by millions or billions of dollars, often using leverage, and the carry trade looks very lucrative. Profit, as long as nothing changes. As time goes on, the trader collects the higher interest from the foreign investment and periodically pays the negligible interest on the yen loan, profiting from the difference. If the yen stays weak or depreciates further against the target currency, there's a bonus. When converting back, the borrowed yen are cheaper to repay. This enhances profits even more. In an ideal scenario, the trader eventually converts the foreign assets back into yen at a favorable exchange rate, repays the yen loan, and keeps the profit. It sounds like a money printing machine, and for a while it can be. In fact, annualized returns of 5 to 6% or more have been typical on yen carry trades in recent years, roughly the gap between US and Japanese interest rates. Some yen carry plays have been even more lucrative if the exchange rate moved favorably during the trade. However, there's a catch, and it's a big one. The whole strategy only works if all goes well, as traders like to say. The biggest risk is currency fluctuation, because the trader eventually must convert foreign currency back to yen to repay the loan. Any sharp rise in the yen's value can wipe out the profit margin, or even cause huge losses. In other words, the exchange rate risk looms over every carry trade. If the yen strengthens unexpectedly, the trader will need more of the foreign currency, dollars, lira, etc., to buy back the yen owed, potentially erasing that interest differential gain. Carry traders typically bank on stability. They seek out times of low volatility and predictable central bank policies. That's why Japan's long-standing predictability, years of zero rates and anemic growth, made the yen a favorite funding currency.
There you have it right there. Shout out to Black Swan Capitalists. These guys are amazing. And this is like the reverse carry trade isn't a threat. It's what Ripple anticipated all along. And you know what? That's exactly what I believe as well, because we know how closely they're connected. In an essence, the Japan and reverse carry trade dynamic are important as a barometer and an amplifier of global liquidity risk. Remember that. Its low rate regime has propped up interconnected markets, but an abrupt unwind could precipitate a deleveraging event with systemic echoes through central banks' interventions, Bank of Japan, jawboning, or the Fed easing, which we just saw the Fed cutting rates, and they're anticipating to cut rates again this month and over the next few months leading into 26. So whatever happens with the Fed has to be in coordination with Japan's central bank, which also needs to be in coordination with the UK, right? So it is, the knee bone's connected to the leg bone, ladies and gentlemen. This is very important to watch this. And I believe it's absolutely why we know that SBI has a deep position in Ripple, because they are a seed investor. Yoshitaka Kitao understands what's going on with Japan's economy better than any of us, right? So it's no mistake to me why Ripple has such a deep relationship with Japan's SBI, largest bank in Japan, and many other 50 plus banks in Japan. So now, with that being said, listen here is Brianna Madigan, who was former head of XRP Global Markets, as she tells you this about a systemic risk.
So accessibility is just probably as it intuitively sounds, the ability to access markets to trade in those assets very easily. And that can be geographically or through multiple infrastructure partners, whether it's exchanges or OTC desks or what have you. And the last key attribute of a healthy liquid market is really resilience. And that is getting at the ability for a market to recover from a significant systemic event. So if there was some sort of a market shock, the ability for order books to get back to normality and tighten back to similar prices to where they were prior to that event relatively quickly.
Okay, you catch that, right? That's what they're working on, and it seems to me that Japan will be a great place to be prepared for it. And not to mention, so would right here at home. Again, the U.S. Treasury is ordered on September 30th to begin implementing a modernized payment system for America's banks to the Treasury. and then the government shuts down the next day. So is that what they're working on right now? They're going to fire it back up when they open the doors? I don't know the answer. I'm just asking the question. Bretton Woods 3.0 is coming, ladies and gentlemen. This is why you should expect a major reset of the global financial system, and I think we're going to get it. Our financial system can be changed in almost any way as long as the main world trading partners can agree to the changes. But given how sensitive the issue is, nothing can be said in public. Any official comments about a new Plan B will crash financial markets Plan A immediately. Central planners know the only way to plan a reset is to do it in total secrecy. That is why investors have to watch what central bankers do instead of what they say and prepare themselves well in advance. In theory, all debts worldwide could be wiped out on Sunday afternoon. We could start from scratch with a new balance sheet the next morning. A new reset will simply bring our monetary system to the next phase. The wait is on for Bretton Woods 3.0. That's what we're talking about here, right? It's exactly what we're talking about here. And it's exactly what the U.S. Treasurer that is currently in office today is talking about as well.
Have some kind of a grand global economic reordering. It's something on the equivalent of a new Bretton Woods, or if you want to go back, like something back to the steel agreements or the Treaty of Versailles.
There you have it. He's saying it. He actually said in this clip, that's why he took the position to be a part of this moment and to make sure that it gets done right, that we don't end up losing on the other side of that equation when it comes out. So super excited for all of that. And could that lead us to a moment like Amazon? Now, remember, Microsoft was sued by the SEC. Tesla was sued by the SEC. Amazon was sued by the SEC. So if we get this market infrastructure bill, and we know that we won our case and successful coming out of the SEC case, we get the market infrastructure bill, the ETFs, they get the banking charter and the Federal Reserve master account for Ripple. Why couldn't we see a similar parabolic explosion like Amazon experienced?
Consolidation phase. It's just a massive cup and handle. Look at this. We're right at the previous high. Look at what happened with Amazon back here in the year 2000. Once it broke that high, it used it as support, just like XRP is using this as support, and then absolutely exploded to the upside. And look at what happened to Amazon after that. It went from, what, $5? XRP is at $2.70 right now, so not that far off. If we just now zoom out here over the macro, and then zoom out here over the macro on Amazon stock, this is what I think is going to happen for XRP. And I think we are just at the forefront of it all. And you have to have some patience here, because from this 2010 to 2025, a consolidation phase, it's just a massive cup and handle. Look at this. We're right at the previous high.
That Amazon went on after that court case ended for them and after they took off and went parabolic. That could be a moment that is sitting right in front of us when government gets the lights back on and then puts this legislation through. And will we find out that the Treasury's upgraded to DLT, and how deeply involved could Ripple and XRP be? You know, all of these things still speculative, but nonetheless, the things that are in front of us are absolutely mission critical, and they're so very close to happening. I think this Q4 is going to be exciting, just like we've heard Eric Trump suggest. It's not financial advice from me or anyone else. It's just my digital perspectives. Bring it on, I say. I'll catch all of you on the next one.